Alright, hello guys, glad to have you on board again today. A quick update on the flow sequencing. Regarding the S&P 500, it's still the same old story. Week after week, the volatility is dried out. We see those squeezes on the prices in here, and we're still waiting for the appropriate moment in which the market will finally decide to breathe again. So until then, it's none of your business. You shouldn't be buying that index, you shouldn't be selling it, so you should be absolutely doing nothing and just standing still. Remember that we have two options. One is we get to reverse, we'll get an opportunity to third range boundary sell trade, and we definitely want to take that one if it's granted by the market. Option B is be very cautious about that. That means we can very well as well go in a straight line. There is no guarantee of anything. All we know is that anyway, we're going to get the resistant context falling below the flat or falling moving average. And until we get that thing, we don't do anything else but to wait and eventually take on the opportunity of a third range boundary if it dares to show up. And that's all there is. Remember that. Just quick note in here is that I will probably, if I can find some time today, release a new version of Framework, which is going to be version 5.3. Which is basically going to do a couple of simple modifications. The one that you should know particularly is that, well, there are some background changes to reassess data points on newly traded markets. So like, for example, those who have massive shadow candle and then trade with a tiny range after their launch. Now the algorithm will be able to detect where the value is, and these kind of ugly initial candle will be erased so that the context will adjust more precisely. So despite these kinds of rare cases, you shouldn't see a significant difference from the indicators computations, okay? If you note some severe differences, please forward them to me in the Discord. It's just that generally I tend to review the indicators for a long period of time before I get to release them. This time around, I found some small differences and I think they're good enough. If you think otherwise, then of course feel free to reach out to me. There could be modifications that may alter some structures and so on. So if you need advices on this, don't hesitate to reach out. Okay, but nevertheless, the most important update to me is one thing that's going to make your life much easier, because remember, you shall not trade third range boundaries, remember, when they are preceded by a squeeze, okay, or a squeeze on the higher time frame. Okay, so that's exactly what we have now. I've introduced the opportunity to see squeezes on the higher time frame. Like right now you can see when the market is squeezing on the context. Okay, so the context in here is squeezed and this is visible by this grayed out area in between. All right, so remember that one very clearly. Okay, that means out of this you won't trade the third range boundary. Out of this that we have in here, remember, we can trade the third range boundary. We want to be very cautious because we get it out from a grayed out area. That means we squeeze the price and the volatility can be there. That's the reason why I said there are reasons to understand that we could very well do it in a straight line, not getting the third range boundary that we would like to. And even if we get it, we're gonna have to trade with very cautious type of position sizing. Okay, so the market is tense, we all know that. All right, so I'll eventually consider releasing that one today or potentially later. It just depends on how much time I'll have available for the day. Okay, back to our regular stuff anyway. So I'm quickly passing over the commodities because frankly speaking, there's nothing new out there. And I guess you have figured that one out. Cryptocurrencies on their own have a lot to speak of. Remember, we were waiting to get our volatility boundary, both on Bitcoin and Ethereum. We've been waiting for it for quite some time. We've announced that a range would very likely settle, and we would likely have to wait several months until we get to do something in the flow sequencing. And now here we are. We've been patiently waiting. We had the Wyckoff pattern in Bitcoin. It created a spring in here. We did trade that opportunity. Turns out not to work out. We rejected the top of the range instead of breaking it. Right back down with a volatility pattern. Exactly where we expected to be in the first place, the volatility boundary, folks. So, like I said, being stopped there, and I took another trade exactly out of pretty much the same price. So everything that was said before has been executed on my end, which means I am now back into Bitcoin and Ethereum, and I've also added Chainlink for obvious reasons. The thing is that Chainlink, I mean, remember what I told you in the previous podcast. I told you there is no other viable candidate to trade on the 4-hour sequencing flows but Bitcoin and Ethereum, because they're the only ones who have monthly contexts, okay? And that's not entirely true. Like, for example, Chainlink is a viable candidate. It's been going right down here to the support context in the monthly chart, touched it, traded into it, and if a support has been built out of this, you could flow sequence the chart afterwards. There's the reason why Chainlink offers quite some interesting stuff. It definitely have made a hell of a lot of a nice first bullish sequencing in here. So of course, remember that out of this, since you get the 3rd range boundary, you might want to trade the moving average, which hasn't been tested there. The 3rd range boundary in here was delayed, so it was goddamn hard to trade. But remember, when you find the Bollinger Band, goddamn trade it. So that's the reason why I was already personally in Chainlink, but I decided to reinforce the position a bit at pretty much the same price here. So that's the same story, and it was basically the same entry point as traded earlier in Bitcoin buying the spring. So all these trades are in overlap one to each other, but I think Chainlink is one another of those examples in which you could very well apply the strategy. But if you got that one right, folks, you know this one isn't similar to Bitcoin and ETH, because this one is just trading the first flow here. It's a pretty damn big first flow, but it is a flow number one. Whether you like it or not, this pattern in here can do any different than that, because in here there's no first flow that has ever happened. It's just a massive accumulation horizontally. Remember, Chainlink was so painful. I was expecting for this breakout so many times until it finally succeeded. And it reminds me a lot about one another candidate that you guys keep complaining about, that is Atom, because Atom is in exactly the same position. We're dealing with the monthly support now, and it may take a little longer than you guys think until we get it sorted out, pretty much like Chainlink, and it's not a guarantee. That doesn't mean Atom will succeed. All I'm saying is, well, I don't know, I don't care. It's just until proven wrong, I'm not going to invalidate a trade that just, to me, it doesn't show any sign of it. Though on the 4-hour chart in here, we might get flow sequencing. So I'm going to look at it from the daily chart, but let's assume that if we go in here, we might see a first flow, which means after 3rd range boundary, you might want to buy the rising moving average in the 4-hour chart. Okay, so we could have a first flow starting in here as well in eventually Atom. Okay, and remember that would be just the first flow here. So as you can see, there is no single crypto market. There are different maturities for different asset classes. The big guys, the big headliners, they're going to be trading their 3rd and final flow. So we're pretty much reaching the end rather than the beginning for them. And some other altcoins like Chainlink are trading their 2nd flow beginning. They've already made the first one and they're now trading the 2nd in the sequence. And there are others who haven't even started yet, like Atom, who could potentially, and that's really a big if, start a first flow sequencing out of a monthly support. So remember, that's all there is. There are potentially other candidates out there, like I think Theta could be variable for a monthly. So that's really all there is. Remember that only the charts that have sufficient history, as you can see, no, Theta isn't working out. The support is way, way wider than that. So there are many assets who could be potential candidates. There are so many more assets who are absolute full of shit big ranges, and you might not want to apply any strategy out there but the ones you see. Don't create them because you feel like you're missing out or whatever. Just be very cautious with all that, folks, okay? But I was wrong the last time around telling you that Bitcoin and ETH were the only one to offer flow sequencing opportunities. That's not true. For example, Chainlink has a very viable one as well. Of course, remember, the rules are what they are. If you know and understand the rule, you can apply it everywhere. I don't have the luxury to look at all the top 500 altcoins or whatever. So there might be potential other viable candidates out there, which you could very well apply the strategy to. So remember that I just make a non-exhaustive list of whatever these things can be worked out on. I look at the big headliners. It's up to you to take the information and process it everywhere else, okay? Otherwise, that would be financial advice to do all the job for you guys. So I'll just take a quick example, showcase the rule in applications, and of course, you guys can replicate endlessly to the infinite amount of assets circulating out there. All right, I'm going to leave you guys with that one, not to overextend this week because there's no need to do anything else. Remember, we've done all the work previously. We've prepared for this. We knew exactly where it would happen. We knew exactly when, but we knew where we wanted to trade if it happened. It happened, I traded, period. So once again, applying the strategy is very easy. getting prepared and having the regularity in applying the rules, not creating rules where you would like to see things happening and they don't. It's not how it works. You patiently wait. We've waited for several months. We knew it would be long, and here we are. And now that we are here, people are starting to turn bearish. I'm freakingly, stupidly surprised because once again, when the things are actually interesting, they're getting bearish. Crazy, stupid shit out there. So I trade what I see. Don't know what the future is going to be made out of. Remember, we all have stop losses to cope if the problem, if the trade just simply doesn't work, because there's no such a thing as a guarantee in the market. And I'm going to leave you guys with that. See you later. Bye-bye.